September 16th, 2024. Today was definitely one of those more sideways days and a difficult day for stop order traders. There were some reasonable stop orders, but I thought overall it was relatively difficult. Sorry, this is so laggy, but coming into the day, you can see we were within this trading range that we formed from yesterday. Basically, starting on the big doji bar on bar 5 was essentially, it looks like it's going to be around the bottom of the trading range. That's where we ended up going to on bar 13. Formed a big double bottom. But more importantly, or just as important, you can see the top of the trading range is formed somewhere up here. So we've been in this big trading range for a long time now. And we actually tried to break out of it at the end of the day. You can see we broke out above the top and we failed. So had 78 been a bear bar closing near its low, it would have been, if you're willing to trade Globex, it would have been fine to sell it. But a lot of, we're talking about day trading. So a lot of traders don't trade Globex, but you can see we're at the top of the trading range and you could bet on a failed breakout above the high and a reversal back down. Bar 1, a bear bar closing near its low. It's good for the bears to get a strong bear bar. However, do you want to sell below 1 when you're selling on a lot of support? You can see there's support. So it's probably not quite as good to short below 1 as you would think it is. You can take the sell, but it's really, again, it's not very high probability and your risk is relatively large. And if you did sell the close of 1, how do you feel about bar 2? So selling below 1, you're probably hoping for a big bear bar closing near its low on bar 2 to break far below the bottom of the trading range we've had over the past day or two. And instead, you get a bear bar with a big tail on the bottom. So I'm not sure it's as great as it could be to be selling below 1 or selling the close of 2. We're probably always in short, but it's trading range always in short. So if you're taking sell below 1 or selling the close of 2 right as the market's going always in short, you might be selling right where the market's going to reverse. You can see we did that all day today, with bars 4 and 5, disappointment, and then reversal 10, 11, 12, 11, 12, 13, really strong for the bears, but reality is it's probably just part of a trading range that ends up becoming a part of a wedge. Or you could argue expanding triangle, something like that. So you could argue this was an expanding triangle open. You could argue it was big up, big down, big confusion. Any of those are fine. So bar 3, I think this is disappointment for the bears, but bears know if they sell above 2 and they're willing to scale in, they will probably make money. Some bears take a quick scalp during bar 4 and they exit. You can see close of 2. The bears who sold above 2, disappointed 3, used bar 4 to buy back their shorts around the close of bar 2. And that's what's a big piece of what's causing bar 4. Bar 4 closes decently above the moving average, so good for the bulls, probably going higher. However, you have to keep in mind we are still in this overall trading range. So if you're buying above 4, it's pretty simple. You can bet that it's the low of the day and that we're probably going to go higher. And we might get some sort of bull breakout today. And if you're betting on that, the thing you have to realize is that while we do have resistance, we have some resistance above. You can see yesterday's high, and the daily chart is really what's important here. Sorry, that's the weekly chart. The daily chart, this is the open of last month right here. So you can see that was the last day of August, and this is the first day of September. And so the open of this bar is not only the high of this South Climax, but the open of the month. So 57.19 is, the exact price is 57.1925, but that's an important price. So if we do break far above yesterday's high, the area we're probably going to is somewhere up here. 5 consecutive bull bars, 4 and 5. Good looking bull bar closing near its high on 5. Can you buy the close of 5? Yeah, you can, but keep in mind, if you're buying the close of 5, look where you're buying. We've had sellers here, sellers here, sellers here. Sellers here and sellers here. You don't know if there's going to be sellers here, but there very well might be. Bulls who bought above 4 were able to scalp out with 5 points, basically just above bar 5. So if you bought above 4 or 5, 6 is relatively disappointing. You can see a lot of the bulls who bought for any reason, 4 or 5, are exiting their longs during bar 6, and that's causing it to be a bear bar. There is a big tail on the top of 6 and a big tail on the bottom of 6, so it's probably a minor reversal, and the move from 3, 4, and 5 should get a second leg up. 30% of the time, the second leg up comes after you've gone below the low. So we have 3, 4, and 5, and 30% of the time, the second leg up that you get is going to come after we get below the bar 3 low, or I guess the bar 2 low in this case, because that is the low of the day. However, I don't really want to take the short below 6, betting this is part of that 30% of the time. It did end up being that, but I think that's 4 and 5 should get a second leg up, even if it is the vacuum test of the top of the trading range. 6, though, is disappointing enough. Some bulls will exit. Some bears might sell, again, taking a chance. But 3, 4, and 5 is the dominant force in the market right now. 7 traded back to the bar 5 close. So the bulls who bought above 5 were disappointed with 6, and they used bar 7 to exit their longs. It's pretty clear. You can see we have a giant doji bar in bar 7. So bulls are more interested in buying a pullback and around the 50% of the area. So around the moving average and around 50% in this area. Again, 50% was basically right at the moving average, and the buyers came in a little bit lower, ended up coming in around below bar 5. But there's a lot of reasons for support here. It's also the open of the day. So open of the day, 50%, and the moving average, there's probably going to be buyers below for a second leg up, especially considering how strong 3, 4, and 5 were. So I'm not expecting the bears to get a strong bear close on bar 7. But you can see the bulls who bought were pretty disappointed, and they exited, causing 7. Bar 8, an inside bar. It's a doji bar. There's probably buyers not too far below, probably sellers not too far above. And it's 3 straight non-bull closes. So it's kind of, 8 is one of those bars that's a true trading range bar where the bears, if they had 6, 7, 8 as bear closes, that would have increased the odds that we were going down pretty decently. If 8 is a bull close, it would have decreased the chances we go down. And instead, it's a totally neutral close. So that tells you that this is trading range price action. And if it is trading range price action, again, increased chance that 5 and 6 is a vacuum test of the high of the range. 9, you can see buyers below 8 initially because most traders are not going to sell below 8. 8 is a low one short for the bears. So the bear who sold below 6 thinks that it's the start of the bear trend. They think that 7 is a pullback, and the inside bar low one short on 8 is the start of their bear trend. However, low ones usually lead to deeper pullbacks and then trend resumption. So if you sold below 8, taking a chance that we had seen the high of the day, your stop would be above 6, not above 8, for the reason that you can see right here. There ends up being more sellers above 8 than buyers. 9, a bull doji bar. So a tail on the top and a tail on the bottom. Again, probably sellers not too far above, probably buyers not too far below. And then we get 10, the bears, it's a double top bear flag, 6, 10, and the neckline is the bar 7 low. So they want maybe 40% chance that we get a measured move down of the neckline. Generally, when you get a double top bear flag, there's a 40% chance. I don't know if it's quite that high in this situation, but you can see they're risking 5 points, trying to make 20 points. So, 40% is a really, really good probability there. Even 30% is still pretty good. But in general, you can argue 40% chance that they get a measured move down. Probably at least 40 by the time you get bar 11, a big bear bar closing near its low, and it closes below the moving average. So we have big up 3, 4, 5. However, bulls who bought for any reason probably not really happy with how the pullback has gone from bar 6 to bar 11. So probably most bulls will exit below 11, and the market might be always in short on bar 11. Is it clearly always in short on bar 11? I'm not sure it's clearly always in short, but it's probably always in short, and it closes decently below the moving average. 12, the body is fully below the moving average, but there is a large tail, so the market got bought up, and this caused a pullback. And a lot of the times when the market pulls back like that, you get a second leg the same size. So you could argue we got the first leg from the open of 10 to the low of 12. And then the second leg right here. And that's what that was, second leg trap. So 12, a bear bar, but a big tail on the bottom. We might be going a little bit lower, but again, it looks like big up, big down, big confusion. 13, a big bear bar, but a tail on the bottom. I think this is a really climactic bar. It's probably more of a buy the close bar than a sell the close bar. If you're short, you should probably exit on the close of bar 13. And the reason is the bulls who bought below bar 2. So we have this is really strong. And the bulls fading the breakout below this large bull spike are probably going to make money. So the bull who buys below here and scales in 5 points lower is probably going to make money. Obviously, 13 is not a very great bar for those traders. However, I still think the bull who buys here and scales in will make money. So a lot of bears know that, and they exit, and that's what causes the rally on 14. along with the bulls who were scaling in trying to make money, is a big piece of what's causing bar 14. 14, it's a possible bear trap. So it's possible that 4 and 5 are a bull trap. Now we have bars 10 or 11, 12, and 13 as a bear trap. If we get an inside bar on 14 and another inside bar on 15, that would be an II after a sell climax, and it would be reasonable to buy above that second inside bar as a possible low of the day and the possible start of a bull channel up. 15, a bull bar, but we have a rally on 14, pullback on 14, and then a rally on 15. So it's possibly a second leg trap. It's reasonable to, it's probably not reasonably short. After 14 and 15, you could theoretically be long. But if you are long, you're pretty much just betting on a second leg up and that this is not the start of a big bear trend. So it's really not as good as it could be. 16, buyers below 15, scaling in lower. We might be around a 50% pullback or a little bit lower. You can see today over here, we went a little bit below the 50% pullback. So during 16, bulls again waited to go a little bit below the 50% pullback. But bar 15 is a bad low one short for the bears. So we're probably going to go more sideways before we go, pick a direction and go up or down. We are probably more towards the bottom of this trading range over the past day or two. So if you're selling here, you're probably selling in the lower third of a trading range, which if you're going to do that, you probably need to be selling relatively small, and you need to be selling relatively small bars. So you don't want to be selling large bars in this area. You want to be selling small bear bars if you're going to sell at all. So buyers below 16, 15 during 16, sellers above 16. So 16 bulls were hoping, first leg up and then a pullback, and they're hoping for a reversal up, but bulls don't want to buy above 16, bad high one with a big tail. So probably sellers above 16, the same way there are buyers below 15. 17, a reversal down, a bear bar, but a big tail on the top and a big tail on the bottom. Most traders are not going to be interested in selling it. Yes, it's a possible low too, since 15 was the low one, but you don't want to sell a low to this soon after these 3 straight bear bars. We probably need to go sideways for a little while. So I would personally rather wait. 17 or 18, a bear bar, an inside bar, but basically just a doji. So we have 3 straight bear bars, 16, 17, and 18, which is good for the bears, but I don't think we're going all that much lower. There's probably buyers stepping in somewhere below here, expecting that we're going to get a second leg up from 14 and 15. It's possible that 17 was the second leg up, but I think overall we're towards the bottom of the trading range here. 19, a bear bar, but a big tail on the bottom. I think most likely not really great to buy above. It's a higher low double bottom. So 14 and 19, higher low double bottom. Possibly we're going to get a measure move up, but I don't really think so. I think it's probably going to be a little bit more sideways here. We might go a little bit higher, but I'm not sure we're going to go that much higher. What I do think is that the bears who sell above 19 and scale in higher are going to make money. I might have to sit through a little bit. I would not put my stop above the 17 high, but maybe, I don't know, the 12 high. You have to keep in mind bar 13 is a sell climax, and sell climaxes like this usually get tested. The high is going to get tested at bar 13. It's its own individual sell climax. So the bears who are selling in here are going to sell more at this high, because the high of the sell climax is more of an area where traders will sell rather than an area where traders will buy. 20, a bull bar, but a tail on the top. It's follow through for the bulls who bought above 19, hoping it was a higher low double bottom, and they're hoping we're going to get a break above the neckline and a measure move up to around the high of the day. But it's really not all that likely, with considering 19 is your signal bar and there's 4 straight bear closes. 21, consecutive bull bars, 20, 21, but big tails 20, big tails 21. Probably not going that much higher, probably not going that much lower. So we're just in a trading range now. What's going on? Overall, the bears are looking for a trend resumption. So they see 11, 12 as 13 as a bear spike. And they're hoping what we're getting here is overall just a pullback, and that we're going to get the start of a bear channel down or some sort of swing down. The bulls think that while 11, 12, and 13 is strong, it's probably just a leg in a trading range over the past couple of days, and that we're probably going to find more buyers in this area. And we're getting reasonably good bull bars, so we might end up getting a little bit more buyers. 23, another bull bar. I believe it's an inside bar. it was an inside bar. So it's a high one for the bulls. So the bulls, higher low double bottom, and they have a new bull trend, and they're hoping 22 is a high one buy for them, but it's really not all that great. You're buying high in trading range. You know there's sellers at the bar 13 high. 23, another bull bar, but it's the best looking bull bar after 3 bars that were not all that great. So 23 is trying to break out above the bull channel line from 2020 and 21, and is trying to break out above the neckline of the double top, or sorry, the neckline of the double bottom from the 14 low and the 19 low. So it's trying to break out above that neckline. And additionally, you're around the bar 13 high, the sell climax high. So there's a lot of reasons why there's probably going to be sellers somewhere above 23. You can see reversal down 24. We did get sellers above 23. So it's not that surprising because of the overlying or underlying context. 24, a bear bar closing near its low. Do you want to sell below 24 for trend resumption? It is a low 2 short. So some traders would argue low 1 and then second leg, low 2. But after 4 straight bull bars, 20, 21, 22, 23, it's hard to want to take a short below 24. There's probably buyers somewhere below. You can see 25, a bull bar closing near its high, but it looks like a third leg up, 14, 15, first leg, 20 through 23, second leg, then pull back 24, and then third leg up 25. The one thing about 25 is this is probably a trading range day because the bears are not keeping any gaps open. I suppose you could say that they're keeping the gap open that they, with the neckline of the double top. So this gap opened, but I thought this gap, if there had been a gap, would have been a lot more important. Usually gaps with more major breakout points, like the bar too low would be a more major gap versus minor breakout points like necklines of double bottoms and double tops, etc. Not that they're not important, they still are, but you just, the more major of the breakout point that you're creating a gap with, the more trap traders you are going to have. So 26, a bear bar, but buyers below 25 during 26. And again, 4 straight bull bars, 20 through 23, so maybe not as great. 27, a bear bar closing near its low. It's probably a credible swing sell. I think the problem is you're on the bull channel, but if you're selling below 27, you have to think a little bit about what your goal is. You're selling, taking a chance that 28 is going to start to collapse, and that from this, we're getting a pullback 1, pullback 2, pullback 3, and now we're getting trend resumption. Not Al, this is an analogy from Brad, but he talks about stop order trading as fishing. You just cast a line, you see what happens. If it's not what it's not what you want, you just, pull the line back in and then you recast later. And 27 is, one of those fishing trades where it could be a second leg trap. The bulls think that 20 through 23 is the first leg, and then 24, 25, or sorry, the first leg up, and then 24 is a pullback, 25. Sorry, 24 is a pullback, and 26 and 27 are the second leg down, and that we're going to get trend resumption up. But I'm not so sure. However, 28 is disappointing enough that bears will probably exit below. And if they don't exit below, as we sell back off to that exit price during 29, you can see those bears bought back shorts. So instead of selling more, taking a chance that we were going to get a big bear bar closing near its low, they end up buying back their shorts, and that causes a big bull bar closing near its high, bar 29. However, I don't really want to buy above 29. It's a big bar with big risk at the top of a trading range. So right when we got here last time, bulls sold. So you can see the bulls who bought above bar 23, they're probably not very happy with how this trade has gone so far. So they end up using the rally up to their entry price on bar 30 to exit their long around break even. So while 29 is a really big and good, good looking bull bar, it looks like it's just more towards the top of a possible bull channel. Something like that. So it's a little bit more difficult to want to buy above 29. And even if we go higher, where are we going? We might close the gap with the 7 low, but your risk reward's not great. So you have to think, where's 2 to 1 of your risk reward? Buying above 29. Okay, past the new high of the day. So you need a bare minimum of a 40% chance that we're getting up here before we get down here to make this a profitable trade. So it's really not as good as it could be. And 30 represents that. 30 is disappointing because 29 might be a buy climax high. It's a possible head and shoulders top with 17, 24, and 30, but probably better just not to not do anything. I don't want to sell below 30. It doesn't close near its low. 31 is a bear bar closing near its low. 31 would be the head and shoulders top. So theoretically, 40% chance we can get a measured move down. However, it doesn't look all that clear of a truncated wedge. It might be more of a bull channel. And we're in an area of support, and we're getting a lot of good looking bull bars, 15, 20, 23, 25, 29. So, well, we might go lower. I'm not sure how much lower. 31, like I said, bear bar closing near its low, possible head and shoulders top. That's, I think you can sell that. I think these are all probably swing trades, but we just did not get the big second leg down. You can see traders were more eager to buy back shorts around there. However, 32 is obviously disappointing follow through, right? So if you shorted for any reason here, 32 is not what you wanted to see. 29 is strong enough for its own second leg sideways up, which could be what 32 is doing. Again, the bulls, we keep getting higher lows, right? So we have a higher low 19, a higher low 28, and they're hoping for another higher low here. But you can see we don't end up getting it. We end up getting a lower low, which is important. We'll get there in a second. So the bulls, 32, are hoping bull trend 29, high 1, 32, but really not a very good argument. Big tail 33, outside down. Sellers above 32, not that surprising. Are we going a lot lower? Are we always in short? Yeah, you could probably make an argument we never really went always in long after bar 13, but it's really not that great. 34, consecutive bear bars. Good for the bears. We might be going at least a little bit lower, but again, it's difficult to want to short. This is starting to look a lot like a trading range, and we're in an area of trading range. Bulls would argue that 35 is a higher low. So this is your low, and this is your higher low major trend reversal. This is a trend line break. It's possible. I think that looking at this as a bull channel and a failed breakout below a bull channel and to get a reversal back up, that might be, a different way to look at it. We end up getting the measured move up here. You can see. So 35, a bull bar, but more of a doji bar. So possible wedge 21, 28, 35. You could buy above 35 for a swing. Basically just looking for a good follow through, and you get it on 36. So 36, a huge bull bar closing near its high. You buy the close at 36. Well, if you're buying 36, look what happened when we got here on bar 23. Look what happened when we got here on bar 29. And now we're here again on bar 36. So do you buy above 36? I don't know. I think it's kind of difficult to take the buy. You know that we're probably going to get a pullback. Some traders prefer to buy around 50%. Again, bulls have been buying a little bit below 50%. They bought a little bit below 50%. They bought a little bit below 50% over here. Traders are really, interested in reducing risk today. So it's probably a trading range day. 38, an inside bar. A low, the bulls are hoping it's a high one buy, but it's really not all that great. Bears are hoping that 36 is a bull trap, and the bulls sold all their longs. That's what's causing 38 to be a bear bar, to have a big tail, but no one wants to sell below a bull bar. An inside bar 39, so huge bar 36, and then pull back 37, and consecutive inside bars 38, 39, breakout mode. And then an outside up bar on 40. You buy above 40, well, you could take a chance that we get a second leg up from 36, but you are buying towards the top of this current trading range. However, you have small risk, and on trading range days, small risk is ideal. So yeah, you could buy above 40 for a swing. What are the odds you get a swing out of it? What are the odds we get back to the bar? I don't know, 11 high, the sell climax high up here. I don't know. If you have a stop somewhere down here, maybe it's 50-50. Should be 2-to-1 risk reward, but I'm not all that confident in anything in this area. So it tells me that most of the things are 50-50. So you should try to structure a trade around that accordingly. 41, bull bar, but a big tail on the top and the bottom. Again, look at the way we've moved so far today. So everything has been in legs, but the legs have been relatively complex. So if we do get a move up, it's probably going to be a complex move. 42 consecutive bull bars, 41, 42, but a big, tail 41, and we are closing above the high 42, but it's not all that great. We're probably going to close the gap with the bar 7 low pretty soon here. 43, an inside bar for the bears. They're hoping that we're essentially, surprise 36, but low 2 short 43. They're hoping we start some sort of move down, but the reality is their first target would be the 40 low, the bull channel low. So I don't really think it's gonna, go that far if we do go down. Another inside bar 44, so consecutive inside bars 43, 44. Again, probably not going that much higher or lower. It looks pretty neutral here, but you can be long for a swing. We are always in long. I think 36 made the market clearly always in long. And then 46 and outside, I think it was, so 45 failed breakout above the II. The Bears, again, hoping for a third leg up, a wedge, 37, 42, 45, but nothing really that great looking for the Bears. 46, an outside up bar, but a tail on the top, obviously. So probably buyers not too far below. Just disappointing follow through for the wedge for the Bears. An outside bar, 47. So we have consecutive outside bars, an OO pattern, so 60% chance of some sort of measured move here. And then 48 triggered above 47, and then triggered below 47, and then rallied back and closed above the 47 high. So this trapped bulls into their trade, so and then trapped bulls out of their trade, which increases the chances that bulls are going to buy back their longs in a panic and cause at least some sort of bounce. So if anything, and when you get bars like 48, these kind of surprises, then you're just looking for the next bar to not be bear follow through. And if the next bar is anything except for a bear bar, a lot of bulls will just buy the close, and that's what happened in 49. An inside bar bull, because bulls are taking a chance that this is the start of a bull trend. So as long as their signal bar is not a bear bar for the start of their full trend, they're willing to buy it. And that's what happened on 49. 50, a big bull bar, a rally back up to around the bar 10 low. So the bulls bought the close. We got the rally and they sold out of their longs up here. And 51, a bear bar, or sorry, a doji bar. You can see the 48 high and 51 low. We have an open gap there. But a doji bar is follow through, not really all that great. 53, a bear bar, or sorry, 52, a bear bar, but no one wants to sell below that. Probably a minor reversal down if we do go down. Bears are hoping lower high from the sell climax from bar 11. 53, sellers above 51 high. 54 consecutive bull bars, but this rally is pretty extended and it's a trading range day, so traders are going to scalp around the bar 11 high, sell climax high when we get there. And that's exactly what happened on 54, causing 55. Tight channel up, I would not sell below 55. You can see actually though we did end up closing this gap right here. I would not sell below 55, probably buyers not too far below. 54, a good enough bull bar, we might get a second leg up from that. 56, high 2 for the bulls. I think you could probably buy above 56, high 1, 52, high 2, 56. You could probably buy above for a swing, but there's probably sellers, scaling in somewhere, however many number of points above the 55 high if we get there. So sellers above during 57, and you can see spike on 50, wedge channel 51, 54, 57. Buyers below 57 during 58. You can see we traded back to the bar 55 close. Looks like we're just going sideways here. 59, a bull bar, but a big tail on the top. So not really worth buying anything here. Again, it's a bull channel, but I'm not sure how much higher we're going. 51 low is the bull channel low. So that's a magnet, which we tested. 60, another bull bar, but again, a tail on the top might be the top of trading range or a bull channel. 61, another bull bar, but a doji bar. So again, I'm not sure how much higher we're really going to go. And an outside bar, 62, tail on the bottom and on the top. Bulls end up exiting their longs. Why are they exiting their longs? Honestly, we're just pretty high up in this range. I think in 3 pushes up, spike, and then 1, 2, 3, or 1, 2, 3. However you want to draw it, it's 3 pushes up. And this looks like a leg in a trading range. It doesn't look all that strong. So 63 is bulls exiting longs. However, bulls know the breakout gap with the 48 high was going to close, so they buy around that area, just looking for a scalp or a bounce up, I would imagine. 64 bull bar closing near its high. Do you buy above 64? Probably not. Maybe, but big bar, big risk, so it's really not all that great. What do traders do instead? They buy around a 50% pullback, but traders have been buying slightly lower than 50% pullbacks all day today. So they're probably going to buy a little bit below a 50% pullback here, like they did during 65. And then a big second leg. If you bought above 64, you do not exit below 65. It might just be, pause before your second leg up. And then you get a big second leg, 66. Try to break out above the wedge, 1, 2, 3, or 1, 2, 3, however you want to draw it. But it's a buy climax at the top of the range. So really not all that great. 67, an inside bar, a bear bar closing near its low. You can sell 67, but it's probably a minor reversal after 66. So you sell 67, 1, pull back 2, you could exit on the close of 69 since it's the second leg, or pull back and then you can exit on the close of 71 since it's the third leg down. So really, when you're selling below 67, you're just taking a chance we get to the buy climax low. And what's the buy climax low? The bar 66 low. And you can see we fell 1 tick below the 66 low. The most recent buy climax is always going to be a magnet. So it's hard to sell below 67 because your risk reward is not that great to get to the 66 low. and that's probably where we'll find buyers. And we ended up getting 3 pushes a wedge down to that area and finding buyers. Bull bar closing near its high 72. You could buy for a swing, or maybe taking a chance to get back up to the 66 high. And there's going to be buyers below 73, obviously. For stop orders on the day, maybe 4, maybe 5, but tough. 11 probably makes sense. I don't know. I thought it was okay to look for trend resumption, but after this, I thought it was okay to maybe sell one of these or something, taking a chance that we started to sell off, but you obviously end up having to get out because we are towards the bottom of a trading range. So do you buy above 28? Maybe, but what do you do when you see 29? Big bars, big risk in the sell zone of this trading range, kind of tough. You could probably, I think you can sell 31. Again, swing trade though, and probably have to get out of 35. Maybe you can buy a 35 higher low major trend reversal, small bar, and it's trading range. So it's possible you can buy above 35, but I would just be cautious, probably wait. Maybe you can buy above 36, but again, resistance area here pretty consistently. This is the bull's third try, so it's probably their final try before they give up and we get a measured move down. But a lot of good looking bull closes and trading range day. So the midpoint of the day is vacuum. The midpoint of the day is a magnet. 40, you could buy above. Stop maybe down here. I don't know if I'd put a stop directly below 40. It seems pretty aggressive, but you're taking a chance that we get a move up to at least the open of the day, potentially the sell climax high, the bar 11 high. An OOO pattern, so it's probably okay to buy above the 0047 by the close of 48 or by the close of 49. And then the only thing I would not buy above 64, the risk is too big for what's probably left. You could probably sell below 67, but risk reward is hard. More of a limit order day today. For limit orders, you could probably have sold above 2, but it's towards the bottom of a trading range. So you don't really want to be selling things down here. You probably want to be buying things. And I would say probably buyers below 15, probably buyers below 23, but could be a little bit difficult. Probably buyers below breakout points like the bar 20, 28 low. There's probably buyers down here. Probably buyers below 46, but not that great, I don't think. And I would say probably buyers below 70, 73 made sense. So big up, big down, big confusion on the open, bull trap on the open. Really, not a great follow through bar. I think we're probably going to get up to here, but we might just bounce and then reverse down if we get up into this area. So I'm paying a lot of attention to 57, 19, 25. It's going to be an important open. The weekly chart, I believe we did not quite get above the yes, we did trigger. At the end of the day, we triggered above the prior day's high by 2 ticks, or the prior week's high. But if you look at this, it's really not all that great to be buying above this bar, right? You're in a big bar, big risk, and towards the area of a sell climax. So I don't really want to do that. I'm just going to look at the SPX. So big bar, big risk towards the top of sell climax. I'm not all that, enthusiastic about buying up here. It's probably not going to go all that great. So monthly chart. Well, this is the SPX. It says we have, it's hard to use. I'll just use the SPY. Okay, well, all of these say we passed the open of the month, but the continuous Emini chart does not say that, and I usually go by this chart. So the open of the month is maybe like 15 points above, and see if we end up getting there tomorrow or at some point over the next couple of days. All right.